Hi, this is Randy Finney with the right side of the chart, and today's Tuesday, January 12th, 2016. And I wanted to do a quick overview on gold and the gold mining stocks. I do get quite a bit of questions in the trading room on the miners. I'll go ahead. I've shared my thoughts there bit by bit in little pieces and a couple charts, but I wanted to just do a quick overview as to the near and long-term direction in gold. I'll try to keep this one relatively quick. This is GDX from a weekly perspective, or a weekly time frame, I should say, a 10-year weekly chart. I've gone over this one quite a bit in the past. When gold, the GDX top back here, we had this broadening top wedge top pattern with that partial rise, which we got a great short entry on, and that was really marked, the beginning of the big sell-off after that second pop back up. And what we've been forming, this appears to be a very large descending broadening wedge pattern. We've now had 4 taps on the bottom of it, 3 taps up top. So that looks fully mature, if indeed that is a valid pattern, but it looks that way to me. And most importantly, is this divergent low here on the weekly chart. We've had bullish divergences forming, and when you see these divergent lows on a weekly chart, that usually plays out for a trend reversal. Meaning, I'd expect at some point, most likely in 2016, I thought we'd get it in 2015, but we didn't. So, well, possibly because the lows may have been in. If you see here, the lows were put back in the fall. Looks like September. So maybe that was the bottom. We'll see. We're not far off the bottom, so way too early to declare anything yet. But what I will point out is you can see that the miners have really hung in there for months now. For really the second half of 2015, they refused to go any lower, so they do have that appearance of being sold out. If you can just make it out back here, I have my volume bars muted down quite a bit, but you can see, just huge selling, what appears to be a big selling climax. Now we've had really 3 selling climaxes, if you will, and this is the most recent one. So we'll see if that plays out or not. It's possible these divergences burn through. Gold could certainly go down to make a new low. We're still in a very precarious situation, and there's not really any evidence of a bottom. Here's a 40-week EMA. It would help if we got above that. So that's the weekly chart. Something I pointed out a while back, and maybe several times on the site in the past, was from a valuation point of view, if you look at where gold is and where the miners are, this price chart, I just overlaid the GLD on top of the miners. Now it's not a one-for-one. They're on different price scales, but for the most part they track. And this is what I'll focus on in this video. It can be very hard at times to figure out where the miners are going, but if you want to know where the miners are going, all you have to do is figure out where gold is going, because ultimately the miners will follow gold. Now they are what I say a higher beta than gold. In other words, they move in the same direction, except if gold drops 5 or 10%, the miners are going to drop 10 or 20. I'm just picking numbers. It's not the exact correlation. But there is that. You see the bigger moves in both directions because gold mining stocks are essentially a leveraged play on gold. Is really all they are by at their barest essence. Gold prices go down. They really feel the pain. They have fixed costs. The stocks go down quite a bit, but when gold prices rise, that's pure profit, and they're still running the same machines, trucks, paying the same salaries to people to pull it out of the ground. So if gold prices were to double over the next couple of years, then that's just a huge boon to the mining sector. So again, that's all fundamental stuff. The charts speak clearly, and we know that gold follows, or GDX follows the gold. And let's take a look here. Let's undo the comparison and go down to, let's say, a daily chart here. You can see this bottoming pattern. Some of you might say, well, that looks like a head and shoulders pattern. Head and shoulders patterns are, I've seen in recent years a lot of traders try to use them as continuation patterns, but they're not. Head and shoulders are topping patterns. Inverse head and shoulders are bottoming patterns. Either way, this isn't really, you don't have the volume patterns confirming here. You don't have a right shoulder. It's not very symmetrical. But in TA, we do have what appears to be a very important bottom right there around 13. So gold, GDX needs to hold that. That's an important technical level. Again, I'm going to roll into gold here in a second because gold right now does look better than GDX. So I'm willing to tolerate and wouldn't be surprised. I'm not expecting it right now, but I just wouldn't be surprised if the miners did have a brief breakout and be a nice bear trap move, flush out some longs, come under here if the metal holds up. And then you'd see the miners snap back up, and that would be a bullish technical event. But for now, the last few days have been real tough. I'm still calling for that 1510 target on the 60-minute chart. And here, there's trend lines here. We can go back to a 2-day chart. There's a long-term trend line. This we have to take out. When this happens, this will be if and when this happens, a very bullish technical event. You can see that trend line coming all the way off the 2012 highs. So right now we're consolidating. This could be a basing pattern, or it could be a continuation pattern in an ongoing bear market. So there it is. From a very simple, straightforward point of view, any solid and sustained break below 13, let's say a solid weekly close below the 13 level would clearly be a bearish technical event, while any solid break above the trend line, especially weekly close above it, would be bullish. And that's the long and short of it. And right now, while we're trading in this range, it can be frustrating because this is a trading range. Trading ranges are hard to trade. I mentioned this in the trading room recently, and this chart has been posted in the past. This is a 60-minute chart I just flipped to on GDX. We have this pretty solid support level here around the bottom of it's 1330-ish. And we're now coming up on that, and it looks like we're testing it. I've had these uptrend lines. We broke below this one the other day. This was covered in the video, and we had a sharp sell-off. And we even took out, I was concerned about this 1420 area. I have several support levels in there. Each have been taken out. So the last few days have been nothing but ugly, very ugly, strong, impulsive selling. Although the volume is relatively muted. Usually you do see an increase in volume when selling. This isn't huge volume. Yes, there's a little bit of an increase, but I'm not overly concerned right now. The near-term trend, if we look at this from a daily perspective, I talked about this recently as well in the trading room. From back here in the November bottom, the November lows, mid-November, we have let's clear this chart up. It's a little busy right now. What we have here is a series of higher lows. We have this low, this reaction low, and so far this one. Forget about the trend line. We're not there yet. So I'm putting the crosshairs on that low. If gold or GDX, can hold up here in reverse, then now we've just put in a new higher low. Now we won't know that until hindsight because we have to move up and away from these prices. So far 1, 2, 3 successive higher lows and 1, 2 higher highs. Or you could call this a reaction high here. We did have a reaction high, another reaction high, and this one was even higher. I'll put the crosshairs. You can see that. So this is plain and simple, by definition, near to intermediate term uptrend, because that started again back in mid-November. But it's certainly close to being in jeopardy here, especially if this December 17th low is violated. So that's outlook on GDX. Now let's get back and talk about the metal, because as I mentioned, gold looks a little bit better. I've got all kinds of charts. Yeah, this one's a little bit busy. Let's just flip back to a 2-day period chart of GLD. This I should lengthen this trend line here. Let's see if I can move this trend line. Sorry, I didn't have this video prepared, all the charts ahead of time. But this was a key trend line that took us down off the October 2012 highs. You can see numerous reactions, well-defined. We had a breakout back here in early 2015, and then we traded through it a few times. But if you look closely, you can see how prices respected that trend line. We came here and there was a back test at this point, and now we're really backtesting, or recently backtested that trend line again. I do have to say, the more times I see a trend line chopped or traded through, the less validity I give that trend line. But with that being said, we've seen quite a few reactions off of it, so I've left it on the chart, something to watch. Most importantly, and I'm going to go back here to a daily time frame now, is this divergent low. You can see here on the MACD we had this positive divergence, MACD making a higher low, the RSI pretty clear divergence there against prices making a lower low. So that's bullish divergence. I should actually just move this here for those. It might be a little. Oh, that's an extra line. I can take it away. So that shows it a little more clearly. That's where the divergent low was really at this point. I should make. Okay, that goes there. So that looks good from a charting perspective. Forget about all these trend lines here for a minute. We had a divergent low. These were trend lines I've had up on the chart for a while. You can see this one I created back in July 10th, 2015. This orange trend line. This was a support level that even goes back a while in time. So what happened is we recently had a breakout. See this consolidation range right here? Let's try to highlight that if I can. Screen draw. So we had this nice consolidation range right here, and we broke out of that and ran up, and we hit this resistance level and came back in. Now we're testing the top of that range. It would have been easier to put a shaded box there. There you go. So we're really testing the top of that trading range, which hopefully will act as support. And if it does, then that bodes well for gold. And if gold does well, because we've seen a much sharper sell-off in the miners recently, and some of the best trading opportunities with gold and GDX are when there's a disparity between the two. In other words, if gold is moving higher and the miners are going lower or not keeping up, or vice versa. What you see is usually a quick game of catch-up. Either gold's going to drop here pretty sharply in the coming weeks, or GDX is going to say, hey, look, gold's holding up, and it actually held that support and reversed, and boom, we're going to see GDX shoot back up and continue the near-term uptrend that it's been in. So right now, gold looks okay. This was a 60-minute chart that I put up I started posting this one, I believe, in December. There's been quite a few of the versions of this chart here on the site. These little trend line here, these trend lines, we've had breakouts. So keep in mind too that when I put the most recent Nugget GDX trade on as a long on the site recently, we had that this was my initial target zone for gold, and I had a second target zone. So we came up, we rolled over just the top of that target zone, and it pulled back in. So gold was getting pretty overbought here, a little stretched. And so it's only normal to see it come back in. And once again, let's put up that shaded box. This is what gold has been doing for quite a few months, basing here in this pattern. And so we're just really coming in and testing the top of that pattern. So that's quite a bit of support there. So keep an eye on gold. If gold can turn back up, the miners will have a good shot of moving up. One more thing to mention on gold. I'm jump back to a 2-day period chart here just to be able to get all of these oversold readings. These white arrows, again, this is something I've shared numerous times on gold. In every instance that we've had an oversold reading on the daily RSI, and this is a 2-day period RSI, so it's going to look a little bit different because each candlestick is 2 days. You can note the rallies, and this might not look like much. I'm using a log scaling, but each of these rallies were substantial and tradable, and came nearly immediately after the oversold readings. So that doesn't look oversold there, but it actually was on the daily chart. Again, when I flip to a 2-day, it skews it a little bit. So this shows you a little bit better. I just went to that 2-day period chart because I can cover 4 years of time history, whereas on this TC 2000 program, if you're on a daily time frame, you can only go back 2 years. One of their bigger limitations, in my opinion. So there you go. So you can look at those rallies and take a look at each one for yourself. And each time gold rallied, again, the move in GDX was several times that. Maybe not several times, but it was quite a bit higher in percentage terms. And I don't have an arrow here, but as you can see, we recently came off oversold readings right about here. Actually, the cross back above was right there. And so that's the rally that we've had so far. You can compare it to the previous rallies, which went on a lot longer for several months. And in almost all cases, here's one that didn't do that much. But in nearly every other case, we rallied for at least a month or two and went up quite a bit in percentage terms. So this would be one of, if not the smallest rally off one of these oversold buy signals. So taking it all together, long-term bullish divergences on the weekly time frame, bullish divergences recently put in a divergent low on the daily time frame, prices just moving off that divergent low, coupled with these oversold readings, and By all accounts, right now I remain bullish on gold. We just keep coming down through here and move, especially if we move below this recent consolidation area, and gold goes on to make new lows. So we'll call it about 100 and 135, somewhere in there. Then, yeah, we're going to go a lot. We're going to go a little bit lower, but I've also mentioned, and I didn't cover it here, for quite a while. This is a major support zone on the GLD. I have a similar chart on spot gold prices, but call it around coming in around 90, almost 99, maybe down to the 95 area. We have really solid support. There's a fib cluster there. I've talked about it, 61.8, the 78.6 fib retracement of one of the major moves up in the bull market in gold, as well as nice price support from these reactions back in 2008, 2009. So there it is. Worst case scenario that I see is just another 8% or so downside in the metal, if that, and we may not get it because we're at the bottom of this pattern here. I've showed this contracting descending channel, and every time we've hit that, we've moved up pretty nicely, and there's that bullish divergence in place on gold as well. So gold going forward, 2016, 2017, looks to be one of the better, looks to be attractive from long perspective, especially once we need to see some evidence of a bottom. So far we've had a few false starts where it looked like we may have bottomed and we didn't. So it's a technical evidence mounts, and you can longer term traders can step in, but right now I think it's definitely an area you can be scaling in here as a long-term trader. Just keep your stops below those recent lows, both on GDX and more importantly on gold. As I said, if GDX takes out their lows and gold doesn't, you could see a flush out move in the miners. So that's something I'm watching out for. Anyways, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.